January is shaping up to be one heck of a month so far, and if you haven't looked at your portfolio lately, you may want to hold off for a while. There's a little thing called the January effect, and this is about the perfect time to talk about it. Hey there, John Henry here, SSFTG. I hope your trading has been fruitful and your mental game steadfast. We are nearing the end of January, and this creates an amazing opportunity to talk about the January effect. Make sure to stay tuned to the end for some really interesting ideas about the January effect and how we can utilize bearish starts to the year in our favor for massive potential gains. Now, if you don't know what the January effect is, basically it's when January is bullish, the rest of the year typically remains bullish. Well, that's great, but what happens when January is bearish, which is looking like is going to be the case this time around? Let's flip the script and do some research on what a bearish January means for our favorite markets. So the first chart on the docket here, I've got the SPY pulled up. So the first market up on the list is going to be the S&P 500, or in this case, the SPY. And what we want to see here is there a scenario where the SPY has a bearish January, and once it does, what happens afterward more likely than not, at least based on history, historically what takes place. So obviously you can see that the January that we are creating right now doesn't exactly look like it's going to be landing anything other than bearish. But let's look backward a little bit here. We zoom out a little bit further to when it only shows the dates. There we go. And we can go back to every new date and we'll see what took place there. So where is my, let's see, this guy right here. So this one is a bearish January. And then after that bearish January, it was a very small one, mind you, but it did go screaming on up back towards the highs. Let's go back a little bit further to the next one in 2020. We know that there might have been some other things going on in 2020, but technically speaking, that did have a bearish January, and that was led off with some seriously heavy corrective phasing. If we go back before that one, and we look at, let's see, 2019 was a bullish, that doesn't work. 2018 was bullish, that doesn't work. 2017 was bullish. 2016 was bearish. There we go. So we have a bearish 2016, and that was led with a sideways into continuation back to the upside. Let's keep on going through. We're only looking for bearish Januaries. There's another bearish January. Let's go a little further back, and we should have enough data by the time we get into the 2000s to work with. We've got another bearish January right there. We have, let's see, that was a bullish January. Bullish January, bullish, bearish right there. Perfect. Let's see, bearish January there. We've got a bearish January there in 2008. 2007 doesn't give us one. 2006 doesn't have one. 2005 has one here. And 2004 is bullish. 2003 is bearish, and we'll go a couple more years to 2000. That should be good enough. 2002 was bearish, 2001 was bullish, and 2000 was bearish. So one thing that we can see when we start zooming out a little bit here is that first off, every time there's been a bearish January, has the rest of the year gone up? So far, for 2021, we had a bearish January, but the year closed basically on its highs. In 2020, we had a bearish January, but from the open of January, we did end up closing the year above it near its highs. If we go back to the last bearish January we had was in 2016. From the close of there, did we close higher by the end of the year? Yes, we did. It closed almost on its highs. And in 2015, we had a bearish January. The very next month, it went up, but did it close the year bullish in 2015? Technically speaking, huge. Now, it depends on how you categorize it, but technically, I'm going to go from the open of 239 and the close here, and I'll say that that was technically a bullish year, but it did not close on its highs. In 2014, we had a bearish January. That year closed on its highs. In 2010, bearish January. That year closed on its highs. And before that, 2008, we had a bearish January. That year closed on its lows. We know what happened in 2008. There were some other things going on there. If we go before that, in 2005, we had a bearish January. That year closed on its highs. If we go before that, in 2003, we had a bearish January. That year closed out on its highs. We had a bearish January in 2002. That year closed out near its low. Starting to see a little bit of an issue, and this is one of the first ones that didn't necessarily have a preceding issue, although, you know, Y2K and the 2000s and all of that. I digress. We go before that, in January of 2000s, we had a bearish January then, and the end of the year closed kind of in the middle from the close point to the open, barely down. So one very, very obvious thing stands out. When we have a bearish January, we tend to have a very strong rest of the year. But that's not to say there isn't a pullback first. If we look at the history of Januaries, one of two things happens. We either have a very small January while the market's continuing its way up and it just keeps on grinding. Or we have a very big, decisive start of the year, and that usually creates larger pullbacks. So although we usually do have a bullish January effect, this could very easily suggest that going into February and March at the very least could see more depth in the pullback. If we look at it from a value perspective and we measure off of the top of the SPY and we go down to the lows, the last major pullback was 35.5%, basically. If we look at where we are now off of the highs, based on the pullback that's taken place, it's only pulled back 9.5%. If we were looking for a pullback that was within parity of about 35.5% or so, then that would mean that we would be looking for a pullback down to around 310, and we are only about a third of the way there. Effectively, if we see the SPY close out on a negative January, we should either see one of two things that's going to happen next. We see an incredibly strong response back up, or we see continuation down for the next couple months. And, well, usually the ones that have strong continuation up and don't really pull back any further tend to be very small, quiet Januaries, and I think this January is pretty far from that. Historically speaking, then, we should expect that the SPY will have a larger corrective phase to come down into parity because of the January effect. So buying in February might not be that great of an idea, and possibly even waiting for March before we have some dipping. Even early April might be the opportunity as far as timing is concerned, historically speaking. So one of my favorite strategies then with a bearish January is to wait for that parity pullback. We know that realistically we should see, with a strong, very broad bear January, we should see continuation pullbacks of at least equidistant candles, if not a little bit larger, down to a minimum of 30%, but preferably out to 35%. If we want to play this on the safest perspective, 30% would be hovering at around the 330s, and that is where a lot of the bullish support is going to start kicking off. So the strategy then is waiting for the bearish January to confirm and waiting for the larger dip, the continuation pullback. That could be on a Fibonacci 618. It could be on something from one of our DTA Academy setups. It could be for any reason, but with a bearish January, it tells us to wait for a deeper pattern. So if we want to position ourselves with some common sense, it would make a lot of sense for us then to wait for a larger pullback going into March or possibly even early April before we really start hitting the gas pedal and kicking the market back towards the highs. All right, well, that's going to do it for this one. I hope this video helps you better understand what a negative January impact has on the market, and even more importantly, how we can position ourselves to navigate the market during that time. If you have any questions, comments, topics for a new video, anything really, drop them in the comments below. I always love hearing from you all. Thanks for watching, and we will see you in the next live trade room.